Financial markets have been on an absolute tear over the last 12 months. Everything seems to be going up over and over and over again. Over the weekend, I was speaking at a conference, and one of the things that came up was everyone was saying, why should I go ahead and look at other assets if my portfolio is going up? Well, when you start to think about a portfolio, and I asked you, how did your portfolio do over the last 12 months? What you would quote me is the nominal rate of return. You would say, well, the S&P 500 is up 29% over the last 12 months, so my portfolio is up 29%. But if I asked you what the real rate of return is, you would take that nominal number, 29, and you would subtract the 6+% inflation. So actually, you were doing somewhere around 22.5% on a real return basis. Sounds pretty good, right? No. Here is one of the big things that I think most people are going to start to wrap their heads around, is that when you are quoting the financial return of your portfolio, you're comparing it to dollars. It's a medium of exchange. It's a currency. That dollar is not a fixed amount of value. Instead, that dollar is actually being devalued at a historic rate right now. That's where you get the 6% plus inflation. And so what you're doing is you're taking the asset itself, the one share, the one piece of property, the one commodity, and you are denominating it in a depreciating value. If the stock market went up 29%, how much of the 29% gain in the stock market is because the dollar has been devaluing, or the stock market is actually creating and capturing upside value? You can't really measure it. And so ultimately what I think more and more people are going to do, and what I personally have started to do, is I denominate my entire portfolio in Bitcoin. Why? Well, Bitcoin is a finite supply asset. Its inflation rate right now is 1.78%. That is lower than anything else from a currency perspective that is considered a major currency that people would denominate their portfolios in. And so if you go ahead and you compare Bitcoin and let's say the S&P 500, if we denominate it over the entire lifetime, Bitcoin denominated in the S&P, here we go. It has fallen off a cliff. The S&P 500 has been crashing. The S&P 500 is negative when denominated in Bitcoin. Remember, this is a fixed supply asset that is a programmatic monetary policy that no one can manipulate. What you're looking at right here is an absolute destruction of the S&P 500 value in a portfolio when compared with a digital store of value. If we then go ahead and we look over the last year, you can see that they're also same exact story. It has been falling very, very rapidly. Now, many people will say, why should I think about this in terms of Bitcoin being the denomination of my portfolio? It's not an argument for you to go and take majority of your portfolio and put it into Bitcoin. Rather, it's the exact opposite. It is the perspective that says, if I want to maintain the purchasing power of the digital store of value, then I need to outperform Bitcoin. So some people go and they will just buy the store of value. Other people will actually attempt to outperform it. And so when you go ahead and you look at that, you can compare it to the historical example of people will look at the dollar and they will say there's 6% inflation. I have to beat 6% to actually be able to gain more dollars. Well, when it comes to Bitcoin, Bitcoin has been going up a lot for a long time. It's up over 300% over the last 12 months, and it has compounded annually for a decade at 180%. 180% compound annual growth rate for a decade, which means that if your portfolio has not been able to achieve 180% compound annual growth rate, then you quite literally have been losing purchasing power when measured by the digital store of value of Bitcoin. And so whether you look at stocks, whether you look at commodities, whether you look at bonds or any other asset, what you find is that denominating your portfolio in dollars continues to go up and up and up. Why? Well, this is true of every single country that has high levels of inflation. Many years, there are the best performing stock markets located in Venezuela, Zimbabwe, Argentina, or other places with high levels of inflation, because quite literally the currency in which the stocks are denominated in is rapidly losing value. It looks like the stock prices are exploding, but it's not because necessarily the companies are becoming more valuable. It's because the currencies are being devalued. If you were to take the stock market and denominate it in gold as well, the stock market does not look nearly as attractive when it starts to be denominated in terms of an asset that is not manipulated from a supply perspective. And so ultimately, I think that people are going to have to wake up to the fact that denominating your wealth, denominating your portfolio in some sort of sound money principle, looking at it and saying, what is the thing that no one can change, no one can debase, no one can take away that supply, that programmatic, transparent monetary policy? And that, my friends, is why so many people feel like I'm getting rich on paper, but I can't get ahead. Well, it's because actually, if you were to look at the unofficial inflation numbers, it's not 6%, it's closer to 15. And so if you're not delivering a 15% plus return on your portfolio, then you literally are falling behind the unofficial inflation number. And if you were to look at Bitcoin, you'd have to be delivering over 300% over the last 12 months.